Good morning, students. Good morning to all. Last day we have studied about the functions of Reserve Bank of India, right? Have you remember about the Reserve Bank of India, the functions of the Reserve Bank of India? Okay, just we will remind about the functions of Reserve Bank of India. After that, we will go to the next concept. Okay. The central bank, that is the Reserve Bank in our India, is functioning in many things. So first one of the important functions of the Reserve Bank of India is having monetary authority. Monetary authority means so all these things about the money supply. So the Reserve Bank of India only controls the supply of money in the economy to stabilize exchange rate, maintain healthy balance of payment, attain financial stability, and control the inflation. And not only that, if you want to strengthening the banking system, the money supply is very much important, or controlling the money supply is very much important. So then who is controlling the money supply? So the Reserve Bank of India only is issuing the currency, but in the same time also the Reserve Bank of India only has to controlling the money supply on the basis of the time of inflation and deflations. Why we have to controlling the money supply means, so then only we can stabilize the exchange rate and maintaining the healthy balance of payment. So all the nations must be controlling the money supply. Because of that only we can bring to the stabilized exchange rate, and because of that many advantages will come to get. Next, the issuer of the currency. So you know already who is the issuer of the currency in our India means. On behalf of our nations, the Reserve Bank of India only will be issuing the currency notes. So except the 1 rupee note, the 1 rupee note is issued by the Ministry of Finance. So except the 1 rupee note, all the currency is issued by the Reserve Bank of India only. The object is to maintain the currency and the credit system of the country. So if the credit system, for the purpose of maintaining the credit system, the issuing currency is very much important. So the currency, on the basis of having the amount of credit system, the Reserve Bank of India will be issued the currencies. Next, the issuer of banking license. So all the banks, even the private banks and the commercial banks, if they want to start as newly, they must get the license from the Reserve Bank of India. As per the section 22 of Banking Regulations Act, every bank has to obtain a banking license from the Reserve Bank of India to conduct their banking business. Next, the bank to the government. So every entrepreneurs and the private peoples or the individual peoples are having many types of the banks if they want to keep any of the account for their daily purposes. So like that, the government also must have one of the bank to doing many things on behalf of the government. So the Reserve Bank of India only acts as a banker both to the central and the state government. The both governments also spending many expenditures. Then on behalf of the state and central government, the Reserve Bank of India only will taking the every steps. So it provides short-term credit and it manages all new issues of government loans, servicing the government debt outstanding, and nurturing the market for the government securities. Okay, so what are the efforts is going to taken by the government? On behalf of the government, the Reserve Bank of India will be doing. Next, bank as bank. Now all individuals and the entrepreneurs are going to borrow the money from any of the commercial banks. But in the same times, the commercial bank also will be in the shortage of financial facilities. In that time, that all commercial banks and the private banks also must be required and approach any of the banks. So all the commercial banks also approaches the Reserve Bank of India only. So the Reserve Bank of India is considered as a all bankers bank. As we are borrowing the money from the commercial banks, all the commercial banks also will be approached to the Reserve Bank of India if they any of need. Next, lender of last resort. So all the commercial banks can borrow from the Reserve Bank of India by keeping eligible securities as a collateral at the time of need or crisis when there is no other source. So the commercial bank and the private banks also will be in need of more financial facilities to maintaining their own properties and borrowed the or rendering the loans to the individuals and entrepreneurs. Okay, so in which basis the commercial bank and the private banks will be collecting or gathering their properties means by providing or by keeping the eligible securities in the hands of the Reserve Bank of India as a collateral. The commercial banks and all other banks can borrow the money from the Reserve Bank of India. Okay, so all the banks will be approached as the last resort, last moment in a Reserve Bank of India only. Next, act as a clearing houses. Already I told. So the clearing houses means the settlement of banking transactions. So every banks also taking the settlement of the transactions from one bank to another one of the bank. So individual peoples and entrepreneurs also will be transaction or will be transferring their checks and other types of the bills of exchange in terms of money. Okay, but instead of all other commercial banks, the Reserve Bank only is doing as a clearing houses. So because of that, the RBI manages 14 clearing houses and it facilitates the exchange of instruments and processing of payment instructions. So now if we can to transferring our bills of exchange and checks and DD everything in turn of money, so on the basis of providing the facility of the clearing houses provided by the Reserve Bank of India only, it is possible. Next, custodian of foreign exchange. So the Reserve Bank of India will protect the foreign exchange and this buys and sells foreign currency to maintain the exchange rate of Indian rupees versus foreign currencies. So whenever the entrepreneurs will be in need of having some amount of foreign exchange to maintaining their international trade, and when they don't have the sufficient level of the foreign exchange, the Reserve Bank of India only will be given to their money. Next, managing government securities. This is also we have studied already. So the government always be selling and buying their securities to the public and other organizations. Okay, when the time of inflation and the deflations or if any crisis is arised. So on behalf of the government, the Reserve Bank of India only will sell and buy the securities and maintaining the securities also. Next, regulator and the supervisors are the supervisor of the economy. The Reserve Bank of India only controls the money supply in the system, monitors different key indicators like GDP, inflation, etc. So in whichever method the nations or the government want to maintaining or regulating the economy, so instead of government, so everything will be regulated by the Reserve Bank of India only. Next, developmental role. So what are the actions have to taken by the government to the development of the economy? The Reserve Bank of India will be doing everything. It provides a wide range of promotional functions to support national objectives. It also includes establishing institutions designed to build the country's financial infrastructure. It also helps in expanding access to affordable financial services and promoting financial education and literacy. Next, publisher of monetary authority data. So every commercial banks and the government also have one of the duty to publishing their monetary authority data or data of monetary authorities. Okay, so on behalf of the government and the commercial banks, the Reserve Bank of India only will be collecting all the data related to the monetary authority. Next, exchange manager and controller. So RBI represents India as a member of International Monetary Fund. So we will say as simply IMF. The most of the commercial banks are authorized dealer of RBI. So RBI only will be collecting all the related data about the monetary authority and what are the actions, what are the things have to taken by the government. Everything will be taken by the Reserve Bank of India to maintaining the member of a foreign direct investment, the International Monetary Fund. Next is the banking ombudsman scheme. So now all the banks also providing the ombudsman schemes. If any of the problem arises to the third party because of the bank, the ombudsman scheme, it will be helpful to claim any of the losses. Next, banking codes and standard of Board of India. So the banking also will be providing the standard codes or banking codes to maintain the global practices. Okay, students, so the 16 points are there. Yesterday also we have studied elaborately and just today also we have reminded, and now we can go to the next concept. Today's concept is credit control measures. So we have studied the Reserve Bank of India only has the power to control the credits, because on the basis of credit amount only, so the inflation and the deflation situations or the economy also will be faces the different type of the basis of trade cycles. Okay, so already we have studied if the Reserve Bank of India and the Commercial Bank of India also if provided more credit facilities, all the entrepreneurs will ready and interested to borrowing the money. Okay, so when if the credit is increased, the many problem may arise. Okay, so the government must be having the control the credits. In whichever way we can control the credits, and what are the measures are taken by the government to control the credit mean. On behalf of the government, the Reserve Bank of India only have to taking more measures to control the credits. So the credit control is the primary mechanism available to the central banks to realize the objectives of monetary management. If you want to maintaining the monetary management as very effectively, so we must control the credit facilities provided by the commercial banks and the Reserve Bank. So the Reserve Bank of India only will have the more power and more capacity to controlling the credits. So here in two types we can control the credits. Two types of the measures are taken by the Reserve Bank of India to control the credits. First one is quantitative or general method. Next one is qualitative or selective method. Quantitative means simply if you want to understand the quantitative mean. So the quantitative of credit will be reduced. And the qualitative mean the quality. Quality means what in some of the other functions and some of the moral science and some of the some of the headings we can bring the controls, the credit control. First, under the quantitative method, so the Reserve Bank of India will have one of the bank rate policies. So the bank rate policy is the rate at which the central bank of a country is prepared to rediscount the first class securities. Rediscount of the first class securities means is simple matter. So the Reserve Bank of India will be fixed some of the rate for providing the financial facilities to the commercial banks. So normally the commercial banks only will have the full power or the agency functions to the entrepreneurs and the public. So normally if the individual persons and the entrepreneurs want to borrow the money, so they want to borrow the money from the commercial bank only. They can't able to borrow the money from the Reserve Bank of India as directly. Okay, so the commercial bank only have to provide the money to the entrepreneurs and the individuals. In which ratio the commercial bank will be provided means on the basis of some rate of interest. So on the basis of some of the rate of interest only, so the commercial bank will be providing to the financial facilities to the entrepreneurs and individuals. Now, if any of the problem, if any of the economic situation, the inflation or the deflation situation is raised, so the Reserve Bank of India will approach the commercial banks to increase the rate of interest or decrease the rate of interest on the basis of inflation and the deflations. Okay, so it means the bank is prepared to advance loans on approved securities to its members bank. Its members bank mean so the commercial banks. So as the central bank is only the lender of the last resort to the bank rate is normally higher than the market rate. So normally in this market rate is very higher. So the bank will be providing some of the financial facilities at a lower rate than the market rate. Now if the Reserve Bank is increased the rate of interest and the rendering money to the commercial bank, the commercial bank also have to increase the rate of interest to the entrepreneurs and the individuals. As normally if the rate of interest is higher, the individual peoples and the entrepreneurs also will not have the interest to borrowing the money from the commercial banks. Okay, so automatically the credit rate or the volume of credit will be decreased. Okay, so because of increasing the rate of interest, but the commercial bank doesn't have any of the right to fixing the rate of interest. So on the basis of the guidelines of the Reserve Bank of India only, so the commercial bank also can have the rights to fixing the rate of interest provided to the bank. Okay, now if the Reserve Bank of India approaches the commercial banks to increasing the rate of interest and the loan amount, advance loans, it must be increased. And because of that, so the banks, the individual also will be released and reduced the interest to borrow the money. So normally if the central bank wants to control credit, it will raise the bank rate. As a result, the deposit rate and other lending rates in the money market will go up. So borrowing will be discouraged and will lead to contraction of credit and vice versa. Next, open market operations. So open market operations mean the central bank starts the purchase and sale the government securities in the money market. Normally on behalf of the government, the Reserve Bank of India only will be purchase and selling the securities. Right? So now on the basis of inflation and the deflations, the Reserve Bank of India will be purchase and the selling the securities. Normally in the time of inflations, so the Reserve Bank of India will be selling their government securities to the public. And in the time of deflations, the Reserve Bank of India will be purchase or will be selling or will be purchase the securities from the public. So in the time of inflation, if the Reserve Bank of India selling the selling the government securities, so some amount of money held by the peoples will come to the hands of Reserve Bank of India. So on the controversy, in the same time, in the time of deflation, the people doesn't have the sufficient level of the money. Okay, so in that time the government will purchase the securities to the peoples. Then the government or the Reserve Bank of India must give back the money to the public. The central bank purchases and sells not only the government securities but also other proper eligible securities like bills and securities of private concerns. Private concerns means so in the joint stock company, the large scale joint stock companies are there. So the shares of the large joint stock companies also will be sold and purchased by the Reserve Bank of India only. When the banks and private individuals purchase these securities, they have to make payment for these securities to the central bank. Next, variable cash reserve ratio, variable reserve ratio. So the reserve amount, already we have studied, the reserve amount is there. If all the commercial bank must be submit some amount of the money to the Reserve Bank of India. So in this variable reserve ratio, the two type of the reservations are there. First one is cash reserve ratio. So under this system, the central bank controls credit by changing the cash reserve ratio. For example, if the commercial banks have excessive cash reserves on the basis of which they are crediting too much of credit, this will be harmful for the larger interest of the economy. So it will raise the cash reserve ratio which the commercial banks are required to maintain with the central bank. For example, if the property of one commercial bank is just 100 crores means, so out of the 100 crores, that bank must be submit the ratio of some amount. So for example, the 30,000 must be submitted to the Reserve Bank of India as in the reserves. Now in the time of inflations or the deflations, or if any of the problem arises, so the Reserve Bank of India will be increased the rate of cash reserve. So in the time, so the commercial bank have to submit from 30 crores to 40 crores. Then remaining 60 crores only will be able to provide the loans to the entrepreneurs and the individual also. So if it is not possible, so commercial bank will be increasing the credit. So the Reserve Bank of India always will be fixing the reserve amount on the basis of the time of inflation and deflation. So similarly, when the central bank decides that the commercial bank should increase the volume of credit in order to bring about an economic revival in the economy, the central bank will lower down the cash reserve with their view to expand the lending capacity of the commercial banks. So variable cash reserve ratio as an objective of monetary policy. It was first followed by the Federal Reserve System, J.M. Keynes. If the cash reserve ratio is high, the commercial bank's capacity to create credit will be less, and if the cash reserve ratio is low, the commercial bank's capacity to create credit will be high. Okay, so by reducing or increasing the cash reserve amount, the commercial bank will be having the low capacity and high capacity to producing the money. So normally the commercial bank must provide some amount of money. Money means some amount of fund from out of these total properties. So in this open market operation and the bank rate policy and the cash reserve ratio, these three is a quantitative or the general method. Next, the statutory liquidity ratio. The statutory liquidity ratio is the amount which a bank has to maintain in the form of cash, gold, or approval securities. So normally all the commercial banks must be having some amount of cash or gold or some valuable securities. The quantum is specified as some percentage of the total demand and time liabilities. So whenever the Reserve Bank of India is increased the statutory liquidity ratio, so on the basis of guidelines or the order of the Reserve Bank of India, the commercial bank also must be have some amount of money in the form of cash and some amount of gold and some amount of approval securities. Okay, by having this amount of money or by this amount of finance only, so the reserve and the commercial bank also can having the possible to lending the money to the public. Okay, so by increasing or decreasing the liquidity ratio also, the lending power of the commercial bank will be reduced. Okay students, I think it's enough. So today we have studied the credit control measures. In this credit control measures, we have studied the quantitative method only. So by the way of fixing the quantitative, we can bring about the credit controls. So if you have any doubt, please ask me, and just to take this portion as your study portions. Thank you.